This is Bloomberg Markets, and I'm Shanali Basak, and it's time now for the Wall Street Beat. A former Morgan Stanley banker who was punished in the block trading probe that rattled Wall Street has now joined one of the firms that was the recipient of the confidential information that he leaked. Bloomberg's Sridhar Natarajan joins me to explain this further. And Sridhar, you've kind of seen this story play out from the very beginning when Pawan Passi was really put on dismissal from Morgan Stanley earlier in the probe. How now did he end up at a firm that was a recipient of this information?
Well, the best way to put it is perhaps some friendships are just stronger than the SEC. It is a bit of a surprise, right? In January, they finally resolved this years-long probe, which rattled the industry. Everyone on Wall Street was closely monitoring this probe because this isn't something that people thought really crossed that line. It was a bit of a gray area, but clearly the DOJ and the SEC didn't agree. Morgan Stanley ended up paying a $249 million fine. Pawan Passi was banned from the industry for 1 year by the SEC, and yet here we are 3 months later where he's joined a firm. Because of its changed status, it terminated its registration with the SEC, changed to a family office, and that allowed for Pawan Passi to join the firm. That's one quirk. The other quirk is this firm, Frank Fu's CaaS Capital, is a firm that was a recipient of the trading leaks. We have to be clear, none of the buy-side participants have been accused of any wrongdoing by the DOJ and the SEC. But still, anyone who's talking about this move clearly has some eyebrows going up today.
Well, let's talk more about what's going on at CaaS. Do we know why they made this move into a family office in order to hire Pawan Passi or for some other reason?
It'll be hard to speculate. We don't believe it was necessarily just to pave the way for Pawan Passi. And look, there has been some scrutiny on CaaS Capital for the last couple of years. The block trading probe itself has been out there for more than 3 years. CaaS Capital's name has been thrown out there as someone entangled in this probe for a while. So that could have also affected the kind of clients that they were dealing with, and perhaps being a family office was a better option, but it certainly allowed for Passi to be able to join them.
It's also worth talking about what happened with Passi during this probe and what didn't happen. He entered a 6-month deferred prosecution agreement with the Department of Justice, pled not guilty, as you had said, to securities fraud to resolve the probe, and there was no monetary penalty. So what do we know also about what the DOJ knows about him and the CaaS executive?
Well, we have to be clear as what comes to the CaaS side of things. Whether it's CaaS or any of the buy-side firms, the prosecutors, the investigators just didn't go there. They focused all their attention on the sell side, specifically Morgan Stanley, specifically to employees at Morgan Stanley. With respect to Pawan Passi, yes, the DOJ didn't charge any sort of monetary fine, but the SEC did slap a $250,000 fine. The DOJ did point out that he had to forfeit about $7.4 million in compensation. And you're right, he does have the 6-month window where he's hoping to go in front of court and say he's been on good behavior so that they can toss these charges against him, and that's why it's the deferred prosecution agreement.
Listen, the story itself is something that is quite striking, but beyond that, perhaps tell us what it means in terms of the aftermath of this probe in and of itself and the block trading business on Wall Street, the relationship between the banks and the buy side.
A lot has changed. Yes, the focus might have been on Morgan Stanley, but pretty much every equity syndicate banker across the street has been re-examining their behavior, has been wondering what is right and what's not. Is it truly the gray area? Are there defined lines within which they need to operate? And that in some ways has affected how people go about their business. Memories can be short, and 3 years later things might behave just like nothing changed. But for now, there's of course a lot of care and caution. And the gyrations of the capital markets also mean sort of you go with the flow. For the last couple of years, for a period, there wasn't a lot of block trades happening. So it wasn't really easy to make a direct line connection between the probe and market activity. But as market picks up, it'll be interesting to see how the league tables shape up and exactly what people are talking about when it comes to banker behavior on these deals.
This story is certainly one of the most read on the Bloomberg terminal and has been widely shared across many news outlets, frankly. How do people respond to the reporting, and how has CaaS responded and Pawan Passi?
CaaS has not responded. We reached Pawan at CaaS. He did not comment. Frank Fu, who runs CaaS Capital, has not responded to our request for comment. As for the street, there is a lot of surprise. There is a lot of shock. Even people who have been very closely following this probe and its outcome, they've been surprised by this move. The fact that CaaS has been publicly ID'd as one of the firms that received the leaks, and to see the figure who was central to this probe end up there just 3 months after the resolution of this probe is certainly not something that people were expecting. It's not everyday business.